Let's talk about the Gold Coast property market since late November 2025, because there's a lot of noise out there, but the reality of it all, it's actually quite simple. The market hasn't dropped, it's shifted pace. We've moved out of a really aggressive growth phase, and in our opinion, it's more balanced. And that's not a negative, it's actually what a healthy, sustainable market looks like.
Exactly. If we rewind to late 2025, we were coming off the back of a very confident and strong growth cycle. We saw annual growth sitting at around 11 to 14%, and in some suburbs, they were achieving over 5% growth for a single quarter. That's created a lot of confidence for our sellers and also a level of urgency for our buyers that we're just not seeing in the market today. And that's predominantly where the shift has happened. The market has not softened, it's just shifted pace and matured. And mature markets reward strategy over luck. In fact, when properties are priced and presented correctly, we're still seeing urgency and competition. It's just not across the board for every property at the moment.
And this is all relevant to what we call micro market movement. The gap between well-performing properties and average ones is widening week by week, and there isn't one specific property market now defined here on the Gold Coast. One of the biggest differences that we're noticing now more than ever is the days on market and the shift in market comparisons. There's simply more properties on the market now than there were 6 to 12 months ago. And that doesn't mean that there's an oversupply, it just means that buyers now have more choice. And all of this creates a different dynamic. Last year you could list and wait, this year you simply have to list and compete.
We're now seeing properties sit on the market for around 28 days, which is a much different environment than it was late last year with a tightly held market. But it's important to put it into perspective. This is still a lot faster than the average days on market year on year, which sits at around 36 days. So while it might feel like a slower market for some, it's still a relatively fast market. And the reality of it is, if the home is sitting, then it's not the market, it's the positioning. The sellers that are achieving quick results are achieving premium results. And if you're chasing the market down, then you're potentially leaving money on the table.
The other major shift that we've seen most recently is buyer behaviour, and we've been extremely cautious about this over the last 12 months. If you look at 2025, there was a real urgency-driven market. Buyers were operating off a fear of missing out. They were quick on making decisions and there were far less negotiations happening. Now in 2026, buyers are more cautious. The fear of missing out emotion is dropping away. They're more price aware, they're slower to engage, and they're more comfortable walking away if things don't stack up into their favour. Buyers haven't disappeared, they've just stopped overpaying.
Absolutely. And we can really see this playing out as to how deals are put together. We're seeing more back-end valuation issues where properties are going under contract, especially at good prices, but then unfortunately the bank is stepping in and potentially shortening the outcome for the sellers. This is definitely leading to renegotiations. Tyler and I have both felt this firsthand for some of our sellers. And it's a real kick in the guts for our sellers when we do achieve a great result, only to then have the bank come through and unfortunately pull the deal apart. So unfortunately, that's definitely leading to potentially renegotiations and longer contract timeframes and potentially in some cases some fallen over deals. The reality is now that the deal is not necessarily done at contract, but it's also at valuation, building and pests, and of course that golden settlement.
Which makes pricing strategy more important now than ever. We're still seeing relatively tight vendor discounting around 3.5%, which can change week in, week out. That tells us that well-priced properties are still holding their grounds. But there's a very clear shift in the market now. If a property is well presented and priced within line with the market, it will generate competition and show results. If it's not, however, it will sit and require adjustment where the vendors will have to meet the market, potentially missing out on opportunity to leverage their price at the start of the campaign. And for those vendors, because we could potentially be facing a shifting market, the market will always find the right price, it's just not always the one you start at.
If we break our market down into price points on the Northern Gold Coast, Tyler and I are witnessing our most competitive market in the sub 1.3 million range. This is where our buyers for upsizers, investors and active first homeowners are still very competitive across all of these active spaces. And once you move past this point, the buyers pool becomes a little bit more selective. This is where we're noticing that market's getting a little bit rocky. At the pointier end of our Northern Gold Coast property market, properties take a little bit longer to sell and the expectation around quality, presentation and pricing increases significantly. We are witnessing buyers being a little bit more picky in this price point, and the higher price point leaves less of a margin for error.
We're also seeing this play out geographically here on the Gold Coast. There isn't any micro suburbs. Notoriously, we're known as a holiday destination. From Palm Beach through to Tambourine Mountain, there's a different calibre of property for each homeowner. And some streets and some postcodes are outperforming others more noticeably than ever. The reality of all this, the Gold Coast is and always will be a lifestyle market, with infrastructure, tourism and accessibility driving demand. So understanding your exact position with the market now is more important than ever.
Sellers are actually starting to adapt to these micro changes. We are seeing more forward planning and more preparation before going on the market, and the greater willingness to renegotiate and listen to feedback early on in your campaign. Because our reality is that the market has become more buyer-led when it comes to negotiations and putting pen to paper. Now more so in this market than we've seen last year and the year before. Buyers are leading the charge when it comes to making offers on properties, and sellers are following suit. The sellers that are achieving the best results are the ones that aren't necessarily the most optimistic, they are the most prepared.
Now, despite all of these shifts, demand is still very strong and it's being supported from multiple avenues. We're continuing to see strong interstate migration, particularly from New South Wales and Victoria. Buyers are still drawn to the Gold Coast because of its lifestyle, as we touched on before, but more importantly because of its value relative to New South Wales and Victoria. The Gold Coast is a destination market and that will never change.
So our international markets are still playing a major role, and if their demand holds, then it really underpins our whole market floor. In some segments, they are contributing to over 50% of our buyer influence. This is specifically our buyer-driven international market. They're contributing to our units and townhouses and our very limited new development segment.
At the same time, we've got a tightening pipeline here for supply on the Gold Coast for 2026. Back in 2025, apartment completions were expected to be around 1,900 per year, but this year in 2026, around only 1,400 per year. So while stock has increased for the short term for our residential market, the new home market in the future actually points to reduced supply. And we all know that's the question that we've been asking ourselves for the last 3 years. And while you combine that with ongoing population growth and migration, it creates a strong foundation for the market.
So when you step back and look at the bigger picture, what we're seeing in our market shift right now is a slight rebalancing. We've got slightly longer days on market, we've got a little bit more stock supply, and we're seeing more considered buyers' decisions, but we've still got an underlying demand issue. This is not yet a downturn, it is just what a healthy market looks like.
And speaking of results, Sophie and I actually at the end of last year transacted about 20 of our sales at the top of the market. Prices that we didn't think were achievable and higher than what we would have seen in the quarter before. Some of you might not actually be aware though, however, that the results and reports actually report from a 4-month time frame. So the statistics that we're appraising properties off are actually the sales reports back from 3 months ago. And it can take up to 90 days for values to transfer through.
It's important that we clearly articulate to our sellers that we are basing you off today's market. As those transactions are relatively new and they were at the top of the market, this can lead to false pricing. Some agents, and Tyler and I have witnessed this happening, can give you prices based off yesterday's results. We are on the ground dealing with buyers today, valuers today, and open homes today. So it's important that we give you all of the expertise that we've had over the years and educate and guide you based off the buyer's mentality right now, and not lead you down the garden path that we are unfortunately witnessing, with price expectations sitting a little higher. So while this isn't negative and it remains positive, it's important that we remain cautious as we move through these economic changes.
We just want all of our clients to be aware that it's our job to give you, sometimes unfortunately, the information that you don't necessarily want to hear. And just be aware that there's agents out there taking advantage of feeding you false information to try and secure listings when listings get tight.
Especially when this is based off his historical sales prices. In fact, I will jump in and say that interest rates are looking as though they're going to increase 3 times before the end of the year, which could in fact impact our market even more so. So while we remain positive on the Northern Gold Coast and demand still remains strong, there are a few elements that are outside of our hands.
We're doing our best to give you information as we receive it on a daily basis, and unfortunately we just don't have a crystal ball. But what we can do is give you guidance based off experience, knowledge and trust that you're receiving the right information from us and not receiving secondhand information from another agent that isn't dealing with the campaigns.
Especially when we may be moving into a market where maintaining your sales volume and sales price, I should say, is about getting ahead of the market and anticipating these changes before they happen to still achieve a premium result.
All in all, just wrapping everything up, hitting the market in today's market really is about strategy and clear confidence with giving the market a clear understanding of your expectation.
So while we don't necessarily have all the answers, the clear takeaway here is the market still remains strong. Demand is still very much there from the buyers. It's just not as aggressive as it was in late 2025. So we want you to make clear and educated decisions with a clear plan as to your selling strategy, because that will lead to a premium and obviously a top result.
In this market, the difference between a good result and a great one is how you position the campaign at the start of the market.
So Tyler and I provided you with a broad market update, but if you would like a more tailored report, then please pick up the phone and give us a call, as it's now more important than ever to keep on top of your value, and we're here to help you navigate it.
We'll speak to you all soon.